Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin, the US dollar, 4-hour chart on Coinbase. And last we spoke, guys, Bitcoin was operating again right inside this range between 9950 and about and about 10,150, $10,150. I did tell you guys if we got a decisive break above that zone, we'd be looking for more than likely continuation to at least 10,400. I told you guys last time, though, that 10,400, even though the chart, I haven't had it marked off here, we're looking at 10,650 as our major area of interest. I did tell you that 10,600 could potentially stop it, and that's exactly what happened. Price did come up, hit about 10,450, about 10,430. Ish, and then of course was rejected pretty hard, coming back down, testing this $9,950 range, guys, and of course that's where we found some support. That would have been your entry point as soon as you saw we were finding support at 9,950, and of course coming back up, taking out this prior high here. In the short term here, this does look like Bitcoin may want to come up a little bit higher, possibly grind its way up to about 10,600, 10,650-ish, but we'll have to see how that kind of ends up playing out here. For now, that is kind of a major pivot area for me. If we get rejected at 10,650, I do think that there's a good chance. Obviously, we may end up playing in the range. I do think that at the very least we do come back down here and test at least 10,150, the bottom of this what was resistance, if not lower than that. But if we can get above, if we can get a 4-hour open and close above 10,650, I do think there's a good chance that we're at least coming up to 11,050, if not higher. If not, I'd be setting my sights on more about 11,500-ish. But that's a big if, and we got a lot of obstacles to go through between now and then. Now, pulling out on the daily does look a little more bullish, at least in the short term. As I said, guys, if we are to remain in this range, more than likely, pure logic would tell you we just bottomed out here. We had a nice looking reversal candle yesterday. It did close bullish. That was a bullish sign. I told you if we closed above that $10,150 mark, that very likely we'd come up and test around this 10,650 to 10,600, this area somewhere up in here. And of course, that's what we're testing right now. So that is followed through. We have taken out the prior high from yesterday's candle. Again, that is short-term bullish, and of course the whole pattern does suggest potentially continuation to the upside, possibly to create a higher low, possibly looking at around 11,500-ish, somewhere in that neighborhood. That being said, guys, I don't think it's going to be a cakewalk, and as a matter of fact, I'm seeing two things. If we pull out here to the daily, of course the daily candle does look a little bit bullish here. We do have some nice reversal candle, as I said, as of yesterday, and of course a lot of people are talking about that we do have some hidden bullish divergence here on the daily RSI, which yes, there's no question that is true. There's no question that's there. But we also have a major area of resistance that we're approaching on that RSI, which is at about that 52.9 area. That area has acted as support and or resistance numerous times on the way back up. It may act as resistance again. We'll have to wait and see. What was support may start acting as resistance. And again, that would have some decent confluence with that area right around 10,650. So it's not going to be a cakewalk to break above by any stretch of the imagination. And in fact, if I pull in here to the 4-hour, what do I see? If I pull in here to the 4-hour, guys, we can see that clearly right now, as price gets higher and higher, what have we created? We created a lower high, right, from point to point here. If we look at the RSI has already created a higher high. So and as price comes up here, obviously we are still, even if price was to come up to that $10,650 mark right here, we still have created a lower high and created a higher high on the daily RSI. So clearly, what are we showing here? This being an overall, looking at this microstructure here, this microstructure here being in a downtrend, looking at the upside, that's going to be hidden bearish divergence. So we had hidden bullish divergence on the daily, which is bringing us up, but we are showing a little bit of potential hidden bearish divergence here. Actually, we are showing hidden bearish divergence on the 4-hour, but it is only on the 4-hour. So I don't want to, overemphasize it, but it would suggest that, again, this is not going to be a cakewalk to break above 10.6. That being said, if in fact we do break above 10.6, I do think that we get a 4-hour open and close above 10.6. I do think we're at the very least going to come up and test 11,000, 11,050-ish, somewhere in that neighborhood, if not 11,500. Pulling all the way out here on the daily, just kind of get a little bit of better perspective. There's no question. Clearly, we are creating a series of higher lows here. whether I draw this via a body or a wick on these candles, we are creating a series of higher lows, but the opposite is also true. In fact, we are also creating a series of lower highs here. So as we pointed out yesterday, guys, we are getting squeezed tighter and tighter within a range here, and more than likely this range is going to come to a head in the next 2 to 3 weeks. As I pointed out yesterday, I would say sooner rather than later. I would say in the next week we should have resolution to this pattern here. Probably less than a week, but no more than a week in my opinion. Now, of course, again, it could go on longer than that, but probability-wise, this thing is going to get resolved. Anywhere in here would be, that's where you start looking for a potential breakout. We are well within that potential breakout range at the moment. Zooming all the way out on the weekly, as I pointed out yesterday, guys, I can't overemphasize enough how important this $11,500 range is. We do need to see a weekly candle closing above $11,500 in my opinion, and in order to solidify this being a quote-unquote bull run. Now, in fact, as I said yesterday, there's no question that this has been a bull run. It may be a small bull run, a temporary bull run, however you want to look at it, but this thing started back in December of 2018, and it is currently the end of August. So we've been in this almost 9 months now. I think it's safe to classify that as, you could call that a very short bull run, but a bull run nonetheless. Now, of course, yes, some people are going to say you need a larger correction to categorize that as a bull run. I'm not going to play semantics here. Whatever you want to call it, we've been in an uptrend for, going on 9 months now. And that is not insignificant, without question. That is a very, very significant run. That being said, is the overall macro trend being threatened? In my opinion, not yet. But I cannot count out the possibility that the macro trend may not be reversing and we may not be coming down lower until we get a weekly candle closing above 11,500 and or price breaking up above 14. As I pointed out yesterday, 14,000 being that golden pocket. If I go from the ultimate swing high to the swing low, that's going to be that golden pocket between the 618 and the 65 fib level. I'm not going to draw that. If you're interested, go ahead and look at it from yesterday's video. But that 11,500 is also the 50 fib level. Again, if I pull swing high to the ultimate swing low of 13,150, that's going to be that 50 fib level, and that's exactly where we can see on the weekly chart that price has found resistance. If it was support back here in January of 18, turned into resistance in February of 18, and of course is acting as resistance now, back in July the 1st, and again on August the 5th. So again, we've wicked above it, but we have not decisively broken above it yet, and we really need to see that happen to solidify this bull run. That being said, is this all just the first correction of a larger, the larger overall bull run? In other words, if you're an Elliott trader, are you looking at all of this as a wave 1, and we are currently coming back down somewhere for a bottom of a wave 2, and then we'd be, of course, coming back up for the third wave? That's a real possibility. If you are an Elliott trader, yes, that's exactly how you're probably more than likely looking at this. There are other ways to look at it, no question about it. If you're a bearish Elliott trader, then you could be looking at this whole thing as, if I pull on log scale, zoom all the way out, then yes, there is a scenario where you're looking at this whole thing as an ABC. So you're looking at this as an A, this being a B, and then, whoop, I'm not sure what happened there. Sorry about that, guys. Let me get this back. There we go. So you're looking at this whole thing as a potential A, B, and you're looking for C to come down much, 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 much lower. Yes, is that a possibility as well? Of course, it's a possibility. There's no question. It's a possibility. Is it a probability? I don't think so. But again, I don't deal in absolutes. If you're in cryptocurrency, you don't deal in absolutes. You deal with probabilities. And right now, I think the overall macro trend is still intact. We can still look at this as healthy consolidation, potentially a lower correction. But it's not until we break down below about 6,500 that I start to get very concerned. Why 6,500? Because 6,500 was the area, this area that price found support, this major block between about 5.9 and 6,500 here. This is where price found support all throughout of 2018. This was the massive area that everyone was expecting to find resistance as we were starting to climb here and initiate this uptrend that we've been in for the last 9 months. And it didn't. It just blasted through this, which is kind of what you would expect to see if, in fact, we were looking at a bull run. So this is why, oftentimes, anytime you have a major area a major area of interest, and it just blasts through, what you see, what was prior support, you want to see it starting to act as support again. So it's going to be very, very interesting to, in fact, see if price does come back down to that area, and if it does act as support, if it does come back down to the area. But if it does not, if this ends up breaking down below this area, then yeah, I'm going to start looking for much, much, much lower lower prices, potentially new lows for 2019. But we are nowhere near there yet. It would again, there is a lot of areas of support below here, and if I just look at this from a basic probability standard, and I look at all this as my wave 1, and I go swing low, swing high, we can see that we haven't even corrected down to the 50. Statistically, if this is in fact a wave 1, if you're an Elliott trader, statistically we'd be on our second wave now, and if that's true, statistically second waves usually end somewhere between the 50 and the 618. So that could bring us anywhere between about 8,500 and 7,200. Again, that's just basic statistics if in fact we are looking at a wave 2. But it doesn't mean it has to come down there. Absolutely not. Nothing has to happen. My point in pointing that out is, even if we do come down much lower, that is not a reason to panic, and that does not negate and does not invalidate this overall uptrend. That would still, in my opinion, be just a healthy correction. All right, checking our moving averages and exponential moving averages. This is on the 4-hour chart, guys. We can see that price is coming up, is now breaking up above the 21 exponential on the 4-hour chart, and we are testing the 200 simple. The fact that we broke below this 200 simple and then the 200 simple actually started acting as resistance was a very, very bearish sign, guys. We are starting to test it now, and at the bare minimum, we need to see Bitcoin get up above this 200 simple, in my opinion. We do have, this is a bearish setup. We do have the 55 on top of the 21, which is on top of the 8-period EMA. That is, again, a bearish setup. That being said, we are starting to see the 821 and 55 EMA all start to converge. We are starting to see the Bollinger Bands looking like they're starting to bottleneck here, which does suggest a larger move may be coming. We'll have to wait and see kind of how that plays out. Looking at the daily, we can see, of course, as we talked about yesterday, we are well below the 21-day EMA. That is, again, a bearish sign. We need to at least get back up above this 21-day EMA. We are above the 55 now, which, again, yesterday, the fact that we rejected right off that 55 was a bearish sign. We are trading above that as of right now. If I can see the daily candle close above the 55, guys, I'm going to get a little more hopeful in the short to medium term. But, again, it's not until we break up above that 21-day EMA that I start looking for potentially much higher prices and potentially to break out of the overall consolidation pattern to the upside. As of right now, again, we are still well below it. Well is a relative term. We are still below it, and again, that does tell me that the bears are still in control, even though it looks like the bulls are still looking for a comeback here. Looking at the weekly, we are trading back up above the 8-week EMA. Again, 8-week EMA has not been decisively broken down below. So again, that is the bulls are not giving up on this fight at all. This is truly, as I like to say, an epic battle between bulls and bears. Usually, you don't see it go on this long at all. We are seeing so many differences. This consolidation period has completely ruined past performance. In other words, in looking at the 4-hour, as we talked about many times in the past, looking at the 4-hour death cross and on both the exponential and the simple, that had traditionally led to death cross had led to much lower prices. Golden cross had led to much higher prices. It's just, and I'm not going to go back. We've talked about that in the past numerous times. I'm not going to go back and point out the way it's played out in the past. But my point in all this is this consolidation has completely not played out the way that many bulls or bears have expected it to, based on past performance and based on certain indications. So again, both bulls and bears, as I said yesterday, have had egg on their face. So it truly is going to be interesting to see which way this overall massive pattern does break. And the longer it does consolidate, I will have to say that I do have to give a nod in favor of the bears. But that does not mean that, again, until we do get some decisive move here, that doesn't mean that the bulls can't pull this off. So zooming back out here on the daily chart, guys, if there's a couple things that I'm going to be watching here. I'm now going to be watching about 12,000 as a potential breakout point. In other words, I've been telling you that 12,400 is the area that we need to break above. Given the fact that we just now came up, rejected right around 12,000, and then came back down, created a higher low here, if in fact we, this is bottom and we do continue back to the upside, I have to start looking at this as potentially, now we're not there yet, but potentially, if I draw this out here, what is this starting to look like? Especially if we do come back up here and we reject right around 11,500, we create another lower high. Price does end up coming back down here. We can see that we've rejected right inside this point here quite a few times. In fact, let me just, there we go, just make that yellow so you guys can see a little bit better. So we can actually see that we've rejected, this area has acted as support quite a few times. In fact, 1, 2, 3, 4 separate times. This is some daily chart. I mean, if we went into the 4 hour, it'd be many, many times, but we can see this acted as support numerous times. We can also see that this area acted as resistance back here on June the 19th. Actually, basically on June 17th, 18th, 19th, and then 20th, it finally broke out up above. Why am I pointing this out? I'm pointing this out because if price does end up coming down here, and if we do end up rejecting somewhere around 11,500, which is an extremely key area, as I've pointed out before, what is this going to start to look like to you? This is obviously going to start to look like, again, if we do continue up here, we reject around 11,500, what are we starting to look like? It's going to start to look like a descending triangle. Now, again, I'm not calling it that yet, but there's no question that based on this prior move here, yes, it was a higher low, but, again, all things being considered, we're basically finding support roughly around this exact same area. Again, kind of like the area of support right around 6,000 was all throughout 2018. It wasn't exactly 6,000. Sometimes it was 5.9. Sometimes it was 6,300-ish, somewhere in that range. But again, we're finding support somewhere in this range this entire time, or have been this entire time. So if this does continue up, and if we reject right around 11,500, then yeah, I'm going to really start to look at this as a descending triangle, and of course that would definitely give the nod to the bears. And this is why I say the more we continue, the more this consolidation pattern continues, the more it's going to start to look like, the bears, it may resolve back down to the downside. And how far could we drop? Well, a measured move on this, would probably somewhere around the mid 7,000s, 7,500-ish, somewhere thereabouts. Of course, we could obviously, with this market as manipulated as it is, we could easily see a bear trap where price breaks down, hits that $8,500 area, and then completely reverses course. And I'm not calling it this now. Again, I am not saying that we are in a descending triangle as of right now. We are not. But I can't rule that possibility out, especially if we continue up here, and especially if we reject right around 11,500. So my point in pointing out 12,000 is, if we break above 12,500, that is going to break this pattern of higher lows here. We will in fact have created a lower highs, I should say, and we will at that point have broken that pattern of lower highs. If we get a decisive break above 12,000, we will have broken that pattern of lower highs, and then of course quickly my bias would shift to a resolution back to the upside. As of right now, guys, I remain a little more agnostic, maybe with a little bit of bias to the downside, but again, it's a very, very little bit of bias, and of course I can't rule out the fact that, as I pointed out yesterday, guys, I really would like to see some resolution on this $8,500 gap on the CME chart. So again, that's what I want. Now, Bitcoin does not care what I want, could give, doesn't care at all what I want. So then that is also not my bias, or that's not what I'm basing my bias on. But I will, if I'm more agnostic, but if I was forced, you put a gun to my head, you say, what is your bias? I would have to say, a slight bias to the downside, a break to the downside, but it is more or less basically agnostic at the moment. And I know that's frustrating to hear, guys. I really know that's frustrating to hear, but at this point, it is what it is. So how am I going to play? Let's go ahead and wrap this thing up. How am I playing this for right now? In the short term here, long term, we're waiting for resolution. Short term here, as I said yesterday, guys, just basic small scalp trades here and there, basically playing support and resistance. Told you yesterday, we may find some resistance around 10,400 if we did break above there. It's exactly where we did find resistance. Price broke back down. Come back down to our area of support, known support of 9,950, rejected right there. If you were scalping, that was a perfect entry point. Came right back up here, guys. And of course, as I told you yesterday, 10,650. If the daily candle did close up above 10,150, that 10,650 was going to be in play. And of course, it does look like that it is very much in play, even though it does look like we may be topping out. So again, I would never get greedy. I always try to get out a little bit early if you are playing this, guys. Never want to get right out at 10,650. You always want to get out a little bit early, and at this point, with that hidden bearish divergence showing on the 4 hour, as we pointed out, guys, yeah, I mean, I can see this thing coming back down and easily testing about 10,200, 10,250-ish, somewhere thereabouts. If we do break up above 10,650 decisively, a 4 hour open and close, I will be looking for continuation to 11,050. If we break above 11,050 decisively, I will be looking for continuation up to 11,500 to the downside. If we do break down below 9,950 for a second time, if we get a 4 hour open and close below 9,950, I do think that we very, very quickly are going to come down to 9,400, and I do think 9,400 very likely breaks. It may not be a quick break, it may not be an immediate break, but I do think 9,400 will in fact break if we do test it. If we do test it another time here, and of course then I'm going to be looking for 8,900 to 8,500-ish, and this is the area that I've got my buy orders, a lot of buy orders stacked in between 8,900 $8,900 and $8,500. The majority sitting closer to about the $8,500 area. So again, I know that's a little bit frustrating to hear from analysts, guys, but sometimes it's the best thing you can do is to do nothing. And with that, I'm going to go ahead and wrap things up, guys. If you do have any comments, questions, suggestions, please let me know in the comment section below. As always, please remember to like, subscribe, hit that notification bell in the bottom right-hand corner. Till next time, guys, please trade safe. Take care of yourselves. This is Working. Signing out.